Good evening, traders. Welcome to the sixth session with collaborative traders, a sixth knowledgeable sharing session that you're going to have. Friends, before we start, just wanted to share a few things with you. In terms of success, or in terms of key to success, there are three factors that get into play. A, practice. B, knowledge. C, research. As far as knowledge and research is concerned, collaborative traders is cutting down your journey short. You know, every research that you had to do, collaborative traders is helping you in that research itself. And the third aspect, which even collaborative traders would not be able to help you, is practice. You need to practice all the strategies that you're looking at. You need to understand what strategy falls in for you. You need to understand what indicators are being discussed, what each indicator means. You need to do your own research on that as well. You need to understand, you need to practice that. That's the key to success. The final key is with you guys, not with collaborative traders only. Collaborative traders is taking you to the doorstep right now. You need to put in your effort. Having said that, we move on to today's session. Today, we've got three great speakers, volunteers who've come up, who've put their foot forward, and are going to be discussing three strategies with you guys. These people are Arvind, Nilesh, and Gauri. These are three people. We'll be talking about Bollinger Bands, we'll be talking about candlestick strategy, and we'll be talking about VWAP as well. To start with, we've got Arvind. Arvind, are you there?
Yeah, bro. I'm there.
Yeah. Arvind, if you could just share your screen. Till the time Arvind shares his screen, people, just for your knowledge, Arvind is from Tamil Nadu. He comes from Nagapattinam. Now, this is very close to Pondicherry, not a famous town, Nagapattinam, but yeah, he is from Tamil Nadu. He's an architect by profession. He's been into trading for about almost a year now. And what he's going to be discussing today is about candlesticks, about price action, about RSI, and the moving averages. So his prime focus for this presentation is going to be candlesticks. Arvind, you have about 45 minutes with you. All the best to you.
Okay, thank you, Avinash. Hey guys, this is Arvind here. I hope you all doing good. Myself, I'm an architect by profession. Okay. My candlestick strategy is based on. Is it audible, brother?
Yes, pretty audible. If anything, I'll stop you in between. I'll let you know.
Okay. My strategy is only based on candles. Okay. I will explain why I took candlestick as my trading strategy. Candlesticks was created by Japanese trader Homa Monihisa. It will show you who sellers and buyers emotion. The emotion will reflect in the chart and creates a pattern. Candlestick leaves be alone if you trade candlesticks alone with indicators and makes it wonder. I personally never trade candlesticks solely, only based on candlestick. I will prefer trade candlesticks along with the technical indicators like an MACD, RSI, and some other. Do not trade candlestick patterns solely.
Arvind, are you there? Arvind?
Yeah, brother.
Yeah. Please continue.
Okay. I mostly trade candlesticks in these six candlesticks are mostly traded. Before we jump into this candlesticks, shall we discuss about the morning strategy I took based on the candlesticks? Shall we move on to the morning trade strategy? These are the morning trade strategy.
Sorry to interrupt. Please go back to those sheets. You have to read what you have written. You just go back even one before. Yeah.
Is it
So
okay,
can you
sir?
start, just explain, you're silent and asking people to read, that's fine. But just quickly go over it and then carry on. Okay.
Okay, 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 sir. Candlesticks will always shows the human emotions. If it reflects, it creates some pattern in the while trading. Do not trade candlesticks solely by looking at it is a green candle, you go for a long. If it's a red candle, you go for a short. That doesn't mean you have to do the same. You have to understand it the deeper knowledge, what they are trying to, what the logic behind the candle. You have to understand deeper knowledge. You have to do. If it's a bullish candle, if it is an engulfing candle, doesn't mean you have to take a trade. You have to see where the formation of the candle and what are the confluences that surrounded by them. These 6 candles are the most important candles for my trading: bullish engulfing, bearish engulfing, morning star, evening star, facing candle, and dark red cover. These 6 candles are the reversal candles. I will show you examples with what are the anatomy behind this bullish engulfing or bearish engulfing. I will show in the next slides. These are the key levels they will form. Very important key levels they will form in those areas: previous week high, previous week low, week high, week low, previous day high, previous day low, day high, day low, support and resistance, trend line, 10 EMA, 20 EMA, 200 EMA. These are the key levels they will form in the for higher probability of trade. With this, I use confirmation by RSI, EMA, and NMACD and volumes. Before we get into this those candlesticks, just we go through the morning trade strategy. After I will come into the candlesticks. This morning strategy is based on candlesticks. If you're office goers, people like office goers, you can trade based on this strategy. It is just before 1 hour in the morning open. It is a range breakout strategy along with the confluence of the indicators. That's now I'll show you in the chart. It will be easy to catch you. Guys, I will trade mostly only on the 3-minute time frame. Note down this. These are the main parameters to take this strategy in the morning. After market opens, I wait for the first 15 minutes candles formation. This is the high and this is the low of the first 15 minutes candle. I wait for the breakout either on the upside or on the downside. Either if it's an upside breakout, I will make a trade. If there is a downside breakdown, I will make a trade along with the confluence of other indicators and other parameters. Most probably the breakouts will happen within the 30 minutes. Sometimes it will be higher. Even after 10 p.m., they will make a breakout or breakdown. The range between the 15 minutes candle is most important. It should be within, I will measure and show you. These are the levels. Between 0.61% to 0.8%, it will be great. High probability trades will work for you. Below 0.5, 0.4, 0.3, there will be probability of breakout, but the high probability will be 0.6 to 0.8 range percentage. Note down this guy. 0.61% to 0.8% will be the high probability trades will occur. Along with other, avoid 0.9%, 0.1%, 1.2%.
Sorry, I don't understand. How do you get that screen so that people know, how to know the percentage? Can you show it to them? So
yes, there is a 0.6%. I measured here like this.
Show how you measure, please.
Take a measuring scale. This is the measure tool. Low and the high should be 0.6%. Okay, 0.62%. The low and the high should be at this level. Less than 5 for 0.4 or they will also give breakouts, but the probability will be 0.6 to 0.8 will be higher. Above 0.9 and 1% is also avoid those things. When it gives breakout, I will wait for I will look for other parameters. If you took this chart, they also give higher high.
Sorry, Arvind, again to interrupt. Can you show where is it 9:30? I thought it is 10:03, your candle.
Yes, sir.
So
Yes, sir.
you said 9:30. Can you really point out, get into that and show us the timings?
Yes, sir. It is not exactly 9:30. It will be the range. The range will be 9 before 10 before 10.
So this candle you drew at 9:30. What you mean is you took the high and lows at 9:30, correct?
Higher?
High and low you drew at 9:30.
Yeah.
Then when it broke out at 10 o'clock, you took the trade. That's what you're saying. Right?
Yeah, along with the confidence of other indicators.
So please be specific when you took the trade, when you drew the lines, and show how the morning strategy works. So basically what I understand, I mean, to be very clear, you wait for 15 minutes, 9:30, you draw the high-low lines of that range, 9:30, 9:35, it could be anything. Then when you look for breakout, either on the upside or on the downside, when it comes, you take the trade. That's what you're saying, correct?
Yes, sir. Yes, sir.
Okay, thank you.
Thank you, sir. At this time, it formed ascending triangle. Higher highs and higher highs, it forms along with a trend line. It formed in a trend line. They give a breakout of the high of the day's high. It took a breakout. It is a bullish engulfing. I will show how to blend this into a bullish engulfing. If it looks like two different candles, you don't understand why it is bullish candle. I will come back later. It is a bullish engulfing. I took a trade along with it is formed in a trend line and it forms ascending triangle. Along with I will show you the indicators.
Again, 1 minute. So we have to wait. Minimum threshold is 0.6%, you are saying, correct?
Yes, sir.
So if it is below 0.6, that range, then we should not take a trade, is it?
You should not take it. The probability will be higher if the 0.6 to 0.8 will be higher.
Okay.
They also give breakouts. They also give 0.4, 0.3. They also give the breakouts, but the probability will be 0.6 to 0.8 range will be higher. Above 0.9 and 1% is also low compared to 0.6 to 0.8.
0.9 is low, is it?
0.9 is avoid those trades. The probability of giving breakouts will be low.
Low.
Because already they reached the 1% within a 15 minutes. The probability of giving breakouts will be low.
Okay, because it's a gap up already. Now, I understood. So if suppose let's assume we are at 36,000 level, just for assumption. So this 0.6 comes to how many points? Can you tell me? How many points in futures?
I'll show you.
You said 0.6%. So in terms
it should be 200 points. About 200.
So as long as it is 200-point range, then what you are saying is it will expand, right? Normally we get 800 to 1,000 points a day, right? In a normal day nowadays, 800 to 1,000 points, except very high bullish or bearish, fall. So what you are saying is the first half an hour, which is what happened. I have also been watching this very clearly. Now, thank you very much, Armin, for declaring this.
Okay, sir.
Always it has 200 points in the first half an hour. Then I do take the trade. Then I know that 200 points will expand to 800, 1,000 points the rest of the day. So which side it is expanding, that is a big question. For that, you are giving a clue now, right?
Yeah.
You're saying after 2 hours. So this is a very good idea because first 200 points, I actually nowadays what I do, I'm not doing much of scalping anymore. So what I'm already moving to a swing trader. So this 200 point, even I made a point last when we traded Friday. So this 200 point for sure, we know rest of the day, it will expand to 800 points range, right?
Yes, sir.
I'm
Yes, sir.
posting the table, metrics table every day, and 800 to 100,000 points. So which side it is going to expand? And if you take it on the right side, you have a probability of getting 500 to 600 points on that trade itself, correct? If
Yes,
you
sir.
wait
Yes.
until the end of the day.
Yes,
Am I
high
correct?
probability will be. Yes,
Yeah,
high probability.
there's a high probability that you will get another 500 points if you wait, take the risk until the end of the day, because you're talking about a one directional trade expanding from 200 to 800 points.
Yes, sir.
Am I correct in my understanding?
Correct. Yes, sir. Correct. Correct.
Okay, thank you.
Okay, guys. These levels, these breakouts is only do not take solely only because of its given breakout. Give some other supporting factors like indicators and the volumes. You have to support this breakout. I'll show you how. Look at the volume. While it gives a breakout, look at the volume. They pumped more volume. Even 50K, it's almost double the 100K it reached the volume. Along with, look at the RSI. It's given a crossover, and MACD is above, and RSI EMA is also above. It gives a perfect breakout, and these levels we probably get. I get only 145 points in that trade because I exited too early. My exit is based on why I exited at this candle. I will show you. Because it already touched the second time, the previous swing high, it didn't reach the above. Along with the RSI showed a divergence and crossed down, and the MACD crossed down. There are no volumes, so I took off the trade from this candle. Anybody have doubts regarding this? Avinash, brother, hello.
Yeah, brother.
Sorry.
The questions
My
we'll
question
take it up later.
quickly. Sorry. How many points you earned this in this? I don't think it's a big move.
It's not a big move. It's not a big move. Because why it is not a big move? 36,000 is the round strike. People will sell, so they don't allow you to breach that quickly. So 36 in a round strike, those say the probability of going high is too low at this trade, even though it gives 200 points. Why I took before is the RSI, I showed RSI divergence, it doesn't move too early. The 36,000 is a round strike, so it is easy to take off. So I book my profit early. Is there any?
Here, can you explain that arrow you have put divergence?
Mr. Jagan, are you ready to take questions now or after the session?
No, I am going to have this style of more interaction so that it's very clear. See, the point is this: people are asking for this morning strategy.
Yeah.
So this is the first of that which coming out of series of 5 or 6 different things, including the first candle strategy. So I want Arvind to really clearly explain so that people could take it, because when he says divergence, he has put an arrow. I want to know what it is.
Yeah. So there are about 3-4 questions. So should I bring them up now?
Yeah, tell me, brother.
Yeah. So basically, first question is from Murli. Can this be used on a gap up, gap down days?
Yeah.
Can the strategy be used?
Yeah, I used it. Can be used in a gap up also. This trade is also took on a gap up also. I took this trade on the gap up.
So, and in terms of the entry bit, do you take the entry at the close of the candle? Of the breakout candle?
Yeah. I took
what if the breakout happens, you take the entry and before the close, it goes down?
It's a probability. Okay. It's a probability.
Okay. So you take the trade only at the close of the candle, right?
Yeah. Only at the close of the candle. Do not trade before the candle closing.
That was a question from Rampal. So Varun is talking about 15-minute stop loss is around 300 points. So it's not Varun. If you just see the chart properly, the stop loss is at the opening of the candle, not at the 15-minute candle. Yeah, Arvind, if you could just
yeah, correct, brother. Yeah, I mentioned that.
Yeah. Okay. What are the candle closes? What if the candle closes 100 points above the line?
100 points above?
Above the line, above the breakout line.
Okay. That's why we have the other compliances with the volume and other parameters. We are doing it. Without volume, if this is a huge candle with low volume like 10K, 20K, do not take that trade. Have the other confluences with the supporting factors for the trade. It's a probability. If it goes out.
Bollinger, you have to be specific. When you say volume, what volume we should take, what volume we should consider as low volume for bank.
Okay.
3 minutes short. Tell me.
Okay. 50K is the high volume as the average bank nifty. To consider as a big move for a particular trade. These are the low volumes. Look at this. The black line I indicated is 50K volume. If it touches the 50K volume, that will be a good candle along with the volume. So there is a high probability at this higher. It is forming a higher high. Already the candles are squeezed and it can be expanded. It expanded is like a bullish candle. Along with the RSI gives the crossover, and along with volume, it gives a high volume. Double we expected 50K volume, but it gives 100K volume. So these are the confirmation supporting factors I took for the trade.
Okay. Okay. Jayant is asking for some more examples. Jayant, we short on time, so examples. Yeah, this is one that every strategy that he's talking about, there's going to be one example. So we short on time, Jayant. So I doubt whether we'll be able to pull up more examples on this.
I think Arvind has one more example for this morning trade. We are talking about morning trade. Arvind, do you have one more example?
Yeah, I
Can you show it quickly, please?
Great.
And you have to be louder. You are talking about volume. Your volume should also be high.
Okay.
Yeah.
This is the Friday. Okay. This is the Friday trade. Look at this. The high and low. Look at the high and low. It's almost 0.6%. Almost 0.6%. Okay. The same trade has happened again. Again, huge volume has been pumped in. Do not think that this is a separate candle. This is a separate candle. Always blend candles together. I will show you how to blend it in later chart. Always think in terms of the logic. What they are trying to do is logic is important. They give the breakout. Look at the fall. Look at the fall. Same 200, almost 200 points. Here, in the last trade, they made a ascending triangle. Here they made a symmetrical triangle. Again, they gave a breakout. Look at the timing, brother. Almost 10. Last breakout also happened at 10:03. It happens at the 10:03. This happens at the 10. Is it okay, brother?
Yep.
Is there anything?
Daniel has a question here in terms of the RSI crossover. So if is it necessary to be on the same candle or previous candle is also fine?
This candle.
Yeah, when the RSI crossover, whether it's got to be on the same candle or the previous candle is also okay.
It depends on the risk ability. If I am a conservative trader, I need something more high probability trades. Even we can take trade here also. Even we can take it here because it is falling and it is like my evening star formation. If you blend these candles together, it is an evening star formation. But we need more confirmation. We can't high probability is the game, right? So we have to be more conservative. So I took the trade here. What will happen if they make a bullish engulfing and they go higher? Anything is anything is possible. So I took the high probability trade along with this confluence factor. Okay.
Okay. You may continue, Arvind.
Okay, man.
Yeah. Next, please.
Okay.
produced 2 examples for the morning trade. Am I correct?
Yes.
Yeah, yes, sir.
Or do you have one more example?
Sir?
Can you just draw, because people, the trend line also people may not be knowing. Can you take another date right away and show another one? Don't worry about the time, because
Okay,
the morning trade is very important. People have been asking. So that is why I introduced this prepone. This is a series of 6 morning trade strategy we will introduce. So Arvind has done apart from a part of his presentation. This is coming. I'm asking you, Arvind, if it is possible to show another day and apply the same thing now instantaneously. You have to draw the trend line. You have to show us. If it is possible, do it. Otherwise, you can produce the other thing. Because when you say engulfing, bullish engulfing, show us what is the bullish engulfing triangle. Okay. Is it possible?
Yeah, it is possible. This is bullish engulfing. Why I said I have to blend the formation. If you look at this is the red candle, this is the green candle. We think this is bullish. There is no probability in what we are studying in the books. It won't happen in the charts. So we have to think in terms of probability and think in terms of logic. Look, this is the bullish engulfing, but if you blend together, it will turn into a hammer, bullish hammer. So this is what I'm explaining. Blend 2 candles and you'll get some result, and you'll know what's going on in the market. That is why I have to say, do not memorize what the candle is having. Do not memorize what the pattern is having. Think in terms of logic, what they are trying to say. I will show you.
So you are talking about adjacent candles, correct?
Yeah.
The blending concept. I'm talking of the blending concept.
Yeah.
Go back there. So you have 2 examples. A shooting star and hammer. So what you see is, instead of seeing a hammer separately, you can blend 2 adjacent candles and you have to understand it as a hammer. Is that what you're saying?
Yeah, correct.
Yeah, correct. And what is below those things? The 3 examples. Can you just quickly?
This is also a reversal. It is also a reversal candle. This is a piercing. This is also a reversal candle, and this is an inverted piercing. We call it a dark cloud cover. These all forms
Sorry. Again, can you go to the dark cloud? Yeah.
This candle is also a reversal pattern. It is a bullish reversal pattern.
Okay.
If this candle, I will explain this candle in later. I'll explain it now. If it is downtrend, there should be a gap down, and it engulfs the 60% or above the midpoint of the previous candle. So it shows the buyers are coming into the market, and it turns into be this candle, this hammer candle. The color, it doesn't matter. Look at the wick. Wick shows who is more powerful, buyers or sellers. Here, buyers took the market from this low to this high. So the same is also happens to inverted hammer, inverted piercing dark cloud cover. This candlestick. So look, is also forms in the top of the uptrend. It is a reversal pattern. They're similar to the piercing candle. Is it okay, sir?
Yeah. Okay, very good. Good explanation. I think so. Unless if people have questions, they can always put it up, and Avinash will ask that. So let us do it in an interactive way, because this is a bit more technical subject, so that I want to be sure that people can understand. Thank you very much, Arvind. Go ahead.
Okay, sir. Can I move to the candlestick chart, or should I explain another morning trade strategy?
One morning trade, please.
Okay. Shall we go to the previous day? Look, I'm showing in a consecutive 3 days. Friday, Thursday, this is Wednesday. Consecutive 3 days. Renuka, someone is drawing in the book. Okay. Same thing. Sir, I already told you, right? There is also possibility of 0.3%, 0.3%. There is a breakout, but the high probability will be 0.6 to 0.6. Here, look at this. This also 0.3, around 0.35, 0.4% also given a breakout. High and low and descending triangle. And look, don't blindly look at this. It's a small candle. Think in terms of the logic what they are trying to say. This is the forming in a trend line, and what I explained is this is a dark cloud cover. I saw just now we talked about, like, this one, this one we talked about, right? This candle is formed here. This candle is formed here. We do not take a trade blindly here because it is formed the trend line. It is the first factor we are looking for. Another factor is always look for the previous candle open should be taken out. Again, another factor is the low 15. The first 15 minutes low should be taken out. This is the breakout, and look at the fall. Even they took a pullback. Even they took a pullback here. And again, there is a breakout. Again, there is a breakout. Is there enough, sir? Should I make another?
Sir, yeah, I think so. Go ahead.
Okay, sir. These are the 6 candlesticks I mostly prefer. I mostly make a trade. There are plenty of candlesticks out there, but the mostly I trade based on these 6 candlesticks. If I take in depth about these candlesticks, I have a separate presentation of the bullish engulfing for the 30 slides. I will share it to the group in later part. Now I will explain in a short term as much as possible. I noted the key levels, right? These are the key levels you have to watch before you enter the trade. Now we go back to the candlesticks. Bullish engulfing. It is a two candle method. It always forms on the downtrend. It always forms on the downtrend. It is a reversal pattern. The first candle should be in red color. Red. It is not a red. It is a bearish candle. In red or bearish candle. The second candle should be in green and engulfs the previous candle. It should be 1.5 times higher than the previous candle. So the probability of the candle should be high. Along with volumes is this most supporting factor. The volume should be so much needed. Even if it is 1.5 times, 2 times, it doesn't matter. 1.5 times is high probability. 2, 3 times it is more highest probability. I'll show you in a chart. I think I already shown you the bullish engulfing. This is the bullish engulfing. Bullish engulfing. I told you, right? This you have to blend this together. It will be like a huge green candle. It engulfs these candles. So it forms a huge bullish candles along with volume. Along with the huge volume, I told you, right? The volume should be most important because they will easily manipulate. So the volume is the highest probability. So it took a breakout trades and along with the confidence of other indicators. So these are the bullish trade I took. Is there any doubts, sir? Avinash, further?
Nothing. Continue.
Okay. Next, we move on to the bearish engulfing. Look at the place. It is a trend reversal. I told you, right? Look at the trend. It engulfs. Look at the trend. It engulfs and moves higher. Engulfs and moves higher. In downtrend, it is sometimes it may give a false breakout. It gives a false signals. So if it is a most bearish day, do not take. Don't think that the bullish engulfing has formed and it is a reversal and it. No, sometimes if there is a huge bearish day, it won't happen. If it is forms on the uptrend, this is a continuation. If it is the forms on the downtrend, it is a reversal. If it is forms on the mid, it is a continuation candle. Look, this is a reversal and this is a continuation. Same as bullish candle. It is a bearish engulfing. It is a reversal of the bullish candle. It is same as two candle method. It is also a reversal. It forms on the uptrend. The first candle should be green or a bullish candle. The second candle should be in red or bearish candle. It should also engulf 1.5 times higher than the previous candle. I will show in the chart. Look at this. I took this trade. It is forming on the trend line along with EMAs. EMAs will always work on. I will use EMAs 10 and 30. It is a crossover will be high probability. At the same time, it works as a support and resistance. I included in the key levels. These are the trend lines and the supporting factors is in the EMAs. And look at the green large bearish candle.
Now, once again, see, actually you're doing it correctly, except now you can completely relate to your entry and exit so that you finish the chart simultaneously, as
Yes, sir.
we will not have more time.
Yes, sir. That's why I included. This is my entry and this is my exit. Why I exit? Because this is a weekly low. This is the weekly low. So I took it break, took out the trade here along with RSA and support. RSA took support. 1 second, sir. Is there a way to minimize this tab?
No, you have already put a text mark on this entry. Just read those reasoning, rational, entry, exit, so that that particular candle is explained. So you can cover that also. Yeah, then we can relate to, see what we are interested to is relate your theory with the actual trades, what you are showing entry and exit, so that we can trade. Okay, so please relate it to this chart in terms of entry and exit, so that you don't need to revisit the chart again. Okay.
No, sir, I have the confluence as what are the confluence in the indicators I have there. So I have a separate tab. So that's what I asked you. How can I change? This is the trade. Bearish engulfing along with a huge. Okay, the tab is not coming. The same thing is it took a support at the previous trend line EMA and 30 EMA and 10 EMA, and it reached here. My entry here and my exit is here. Why I exited? Because look at the divergence. It comes lower low, it forms higher high along with the crossover. So I took a trade at the previous day low.
Can you show the confluence also at that point? I see the confluence, yes. Yeah. With other indicators.
Look at this. RSI showed crossover along with the divergence, and look at the MACD making a crossover, RSI EMA making a crossover. Here are the confluence I have. Is most probably it is a weekly low. So there is a probability, I anticipate there will be a reversal form. So I took out the trade here. Can we go to the next slide? Is there any doubts? Avinash?
None, Nilesh. Arvind, continue, please.
Okay, thank you. Look at this is the trend reversal. If it is forms in the downtrend, it is a continuation and it is a trend reversal. If it is forms in the uptrend, same as this is a morning star. Morning star is a three candle method. It always forms on the downtrend. It is a bullish reversal. Don't think this is the first candle. Second is a doji or a spinning top. Anything. It is not a. It should not be a big candle. Three candle method means there should be a three candle. It doesn't like that. It should be first candle should be a red candle and second should be a doji or a spinning top. I will show you doji. This is the doji. This is the doji. You might want to check the this is spinning. This is a spinning top and this is the green candle. It is forms on the downtrend. Third candle should be green and it should engulf the first candle 60% of the first candle. If it is higher than the first candle, it will be okay. but the basic thing is it should be above 60% of the first candles. It should engulf the first candles 60%. Same as it won't be like a textbook, it won't be appear on the charts. If this is not, this is the perfect one, but it won't appear on the chart. Like you have to blend, or you have to think in terms of how, what they're trying to say in different, it won't be like this. There will be a small, large green side the doji, dragonfly doji or something, but it won't be like same as what you are expecting. This is the morning star. Look at this. This is the morning star. How it is on the PPT? It won't be like this. This is a red candle, and it is a small bodied candle, and it is a huge green candle. If you blend it together, it will be like a huge hammer. It will be like a huge hammer along with a huge lower neck. I took this trade on the support level. These are the previous major support. The orange line is a major support level. I have drawn it on the daily chart. So it is a major support level. It took on the major support level along with the previous week low it found, and along with the RSA and NMAC confirmation. I took this trade here and I exited trade here because it formed a huge small body inside Harami. I will show why I exited here. Look, we expected 50K volume. There is a 50K volume, 100K volume green candle. But look, suddenly there is a huge, it beat the previous candle, red candle, along with the Haram inside candle. So there is a probability of reversal will happen. It happened, right? It happened. So I exited here because RSA crossed down. So the entry will be, I exited here. I make it along with the MACD, look at the MACD. MACD also crossed down. RSEMA also crossed down. These are the supporting factors I took to end, exit my trade. Is it okay, bro? Avinash, any questions?
Very good. You're going the right way. Please go ahead, but little faster now.
Okay. The same as the bullish candle. Look at this. Look at the morning star. We talk about the, I told you, right? There's the huge wick on the doji as a pin bar, this kind of candles. These are the supporting candles. You can search it on Google. Look at the evening star. Evening star is a same as what we are, it's a reversal of the morning star strategy. It is also 3 candle strategy. It is the opposite of morning star. It is always forms on the end of an uptrend. It is a reversal. It is a bearish reversal. First candle should be green or a bullish candle, and the second should be a doji or a spinning top, and third should be a bearish candle. The same as it should engulf the 60% of the first candle's body. And if you want to if you are a conservative trader and if you want to make a high probability, if it is 60% and suddenly there is again the move up. So if you want the high probability, you should always the high should be the first candle's low should be taken out by the third candle. If they taken out, put the stop loss below the first second candle high, and this will be high probability. If you are conservative and you need a more probability, that will be good. I will show. Look at this. You think this is a bearish engulfing? Yeah, it is also act as a bearish engulfing, but it is an uptrend. Think in terms of logic, think in the blending, how it works. That same trend line. This is the same trend line. I draw 1, 2, 3. I didn't took the trade here because look at this. It is 50%. It is just 50% only it engulfed. This already I have the green candle uptrend, green candle. It is a resistance again doji again on the red candle. I didn't take a trade here because it is 50% only it engulfed. Again, you may take the trade here. I need a high probability. The volume should be high in this trade. I started here and I closed my trade here. along with the confluence of RSA and other
Can you
factors.
show the confluence?
Okay, sir.
Okay, good.
Sure. Here also there is a bullish Harami. Look at the volumes. If you think in terms of volumes, if it is a huge volume. Suddenly they pump in huge volume, huge green volume. Look at this. It is an inside candle in a bullish Harami. So if you're an aggressive trader, you will hold the position. But I am a conservative trader. I will exit my position here.
Okay, go fast. You are 5 minutes.
Okay. This is a piercing candle. Piercing candle is also a two candle strategy. It forms on the bottom of the downline. It is a bullish trend reversal also. The first candle should be in red or a bearish candle. The second candle should be gap down. It's some most high probability will be should be gap down and closes above the midpoint of the previous red candle. So the probability will be high. Above, if it is forms above, it should if it is engulfed previous candle, it should be a bullish candle, bullish engulfing. The same as the bullish engulfing. But even it is a reversal candle. It doesn't engulf. If you blend it together, it is still a hammer. It is still a hammer. This candle is going to be. But it is a red candle. But look at the wick. Wick will be huge wick. That shows the bias potential. Same as this is the previous swing. This is the previous swing low. This is the previous swing low. It is a downtrend. And look at this. If you take a little bit of gap down, little gap down, it engulfed above the midpoint of the previous candle. If you're an aggressive trader, you may I know this will go around, so I took a trade here, and if you want to be a conservator, you should make an entry here because it look at it. If in case if you taken here, it will be like a still it look like a hammer, huge hammer. So I trade along with other parameters in MACD and other confluences. I'll show you. This is the day's high. Why I took here? It is also a end of the day, and also it is a day's high. It is a day's high. I'll show the confluences.
So Arvind, 1 minute. Stay there.
Okay.
Arvind, what I'm saying is, sorry, I unmuted. This is a perfect example of a swing trade. You are taking the swing low, and that is the swing high. Am I correct?
Yes, sir. Yes, correct.
Yeah, correct.
Day's high. Yeah, it is a day's high.
It's a swing trade, taking at the swing low and exiting at the swing high. Can you measure the points, please, quickly?
Okay. If you are an aggressive trader, if you entered on the first candle, it will be 300 points around.
So this is what, guys, we are saying. See, this is a perfect example of a swing trade. So instead of exiting 20 points, 30 points, if you do it correctly, within how long, how much time it took, Arvind? Can you measure that also? Tell me the time.
Okay, sir.
The 300 points you earned in how much time?
Within 14 bars. Within 14 bars. And
how much time? How many minutes? Or how many hours?
It's around 45 minutes.
See, 45 minutes, how many points? 300 points. Yeah?
300 points.
See, what else you want? One trade is enough. You don't need to do 20 trades for 50 points, 15 points. Who, Avinash, you do a lot of this trading, right?
Yeah.
Yeah, 20, 25 trades.
Yes,
for you, this one.
Yes,
One trade is enough, 300 points. You can just exit. And then with that profit, you can take all the risk in the world. You have 300 points on your hand. You can try 1 or 2 trades. Even if you lose half of it, it's fine. Still, you are in profit. So thank you very much. This is a very perfect example. This is what I wanted to see. What I'm trying to say again, look, to everybody, all the strategies, we have 3 plus now another, let's say 9, 10 strategies which you are going to do. Everything will lead to the same result. It is not GMI, GI or Willy or anything. Even if you take with super trend trade, you will get the same result. Even you take with the Renko, it is same, GMI. So there are many roads to the same destination. So what you are good at, this is what I'm saying. What you are good at is, for example, Arvind he's passionate about candles. So see how knowledgeable he is, and he's able to relate this particular aspect, Arvind. I am happy that you are able to relate the theory with perfect examples. Very good compared to your original presentation. It is far better, not only better, it's very clear and excellent. Now, so the point I'm trying to make is, it is not the number of trades you make, it is the quality of the trade that makes you a better trader, a profitable trader, with less effort, correct entry, correct understanding. Then what I'm saying is, if you own your own strategy, if you are good at candlestick, take the strategy. If you don't want to look at the computer all the time, go and take the super trend strategy. You will take only 3-4 trades. That is also fine. But if you are a deep scalper, that is also fine. You can take scalping like some people do. So everything is fine, but understand your profile, understand your likes, your risk capacity, your own fear and greed, your mental thing. Own that strategy. That is, once you do that, 1 month, 1.5 months, you practice, you will really be in a very good profit level. So it is what this strategy suits you. That is the whole idea of that. We are presenting so many options for you to take what it is. Okay. Now, is there anything further, Arvind, or
nothing, sir?
Yeah.
Nothing, sir.
Can you give your closing comments, please? Arvind, you give your closing comments, and we can move to the next topic, next speaker.
Nothing, sir. Nothing. I will close.
Okay, thanks a ton, Arvind. Thanks a ton. Very
Thank
well
you,
explained. Rather, I would say a lot covered and very well explained. 6 candlestick patterns with trade examples, great. Now, friends, fellow traders, my request to you is spend time with these 6 patterns that have been explained today. Rather, I would put it as an homework for you, everybody, tomorrow. Scan plain charts tomorrow, mark these patterns on the charts, understand these patterns, these candlestick patterns more. Okay, moving on. Up next, we've got Nilesh.
Thank you, sir.
Arvind, if you could just stop sharing your screen, and Nilesh, please share your screen.
Okay, thank you, sir. Thank you, Avinash. Thank you, Jagannath, sir.
Thanks, Arvind. A little bit about Nilesh till the time he sets up his screen. Nilesh is from Kalyan in Mumbai. Okay, he's an electronics engineer from VJTI. He started trading about in October last year, and he's going to be talking about in detail about Bollinger Bands. Over to you, Nilesh. All the best.
Hi, everyone. Can you see my chart?
Yes, we can.
Yeah, okay. So my name is Nilesh. I'm from Kalyan, which is a place 25 kilometers away from Mumbai. I'm an electronics engineer. And today I'm going to present Bollinger Band strategy. Okay, let's start with this one. Bollinger Band is a type of price envelope. It was developed by John Bollinger in early 1980s. Okay, and this can be traded across various markets. For example, stocks, futures, currency, anything you can use it. And this is a volatility indicator. Okay, John Bollinger. Let's talk about John Bollinger. John Bollinger is still active in the trading community, in the finance community, and this Bollinger Band is pretty much has been useful for most of the trading opportunities. Now, let's talk about the time frame used for Bollinger Band. It can be used for any time frame: short term, weekly, hourly, daily, monthly. You can use it for any time frame. The question which Bollinger Band answers is: are price high or low on a relative basis? Now, this word relative basis is very important here. By definition, price is high at the upper band and price is low at the lower band. Now, let's talk about standard deviation. I'm very sure you guys, everyone must have done this during 10th standard or, everyone. The thing with standard deviation is there's an empirical rule with standard deviation. Under one standard deviation, roughly about 68% of the data is covered. under 2 standard deviation, 95% of the data is covered. Under 3 standard deviation, 99%, 99.7% of the data is covered. Okay. So remaining, what about the remaining 0.3%? See, standard deviation is used across every field, if not many. The thing with standard deviation is, it is used for understanding risk events, for example, fat tail events, for example, black swan events. For black swan events is, I'll give you the example of it. World War I, World War II, the Black Death. These are the example of black swan. Even 9/11 and 2008 financial crisis is an example of black swan event. Then there's white swan events which have a probability of occurring, but still they are very rare. For example, coronavirus, the 1919 virus, and most of the for also something like asteroid hitting the Earth and destroying the complete planet comes under this after the standard deviation of 3. The impossible events occur after 6 or 8 standard deviation. And yeah, this is a Gaussian curve. This curve is also known as bell curve. Okay, so let's go back to Bollinger Band.
Nilesh, I have to tell you something important.
Yes, sir.
If you allow me, go back to the bell chart.
Yes, sir.
Look, if you allow me, I want to enhance it.
Sure, sir.
Yeah, if just one minute. See, when I was in Europe, when my kids were studying in college, they were all evaluated based on standard deviation, meaning there is a question paper given, answers are given, 40 people are in the class, they use the standard deviation and they make sure that 2% get the D plus or A plus or whatever it is. And then this is it. I don't know whether in engineering colleges, this form of evaluating students, is it followed? Nilesh, do you have any?
Not really, sir. But
you don't
yeah,
evaluate on the basis of whatever the question paper, depending on the relative performance of the student, they are given in A plus or D plus or B plus, things like
sir,
that.
this thing is followed in IITs.
IIT, okay.
Yes, sir.
Yes, but this is followed completely in all the US universities, all the European universities. And I know, okay, IITs, yes, it follow. Maybe some other colleges also. So
plus IB colleges, they follow this.
They follow it.
Yeah.
Okay. Now, this is a very important, this bell curve. See, everybody should just remember this. We are saying the trading is the game of probabilities. Okay. So now, this standard deviation will come in every strategy, you will see. Not only in this, we are going to have another strategy, this VWAP band and things like this. So you must think of probabilities. So when trade is at 3 HD, that means it has reached the maximum, right? So the possibility is that it will go back because it can't go any further. 100% is the maximum. He is saying 99.7% is the probability it has reached that probability. So this game of probability, this bell curve, you have to have this mentally thing. What is my probability of winning this trade? What is my probability of winning this success? So all this candle thing, all the strategies we follow, the main thing is, am I improving the probability of my success? The tool I'm using, the strategy I'm using, the indicator I'm using, the chart I'm using, is it adding to my probability? If I think the probability is more, I will put entire money in that trade, right? That is the hero or zero game. The probability is extremely high, I'm sure, and I put. If the probability is low, I will just add 1 lot, 2 lot, 5 lots and everything. And as the probability the trade is going in my way, then I will add more positions. So this is how the game should be played. So please, this bell curve is a very important concept, as Nilesh said, and this is the game of probability. So you must think in terms of probability. And you will see the standard deviation again and again being used in every strategy. So please pay attention to people who are non-technical people or non-science students. Go back to this bell curve understand this probability, and then try to keep your mental setup to think in this thing. Thank you, Nilesh. You can proceed. Thank you for
Yes,
your
sir.
time.
Okay, so let's talk about Bollinger Bands now. Bollinger Band has three components. The middle band is known as a 20 period moving average. There's the upper band, which is 2 standard deviation away from the middle band, and then there's a lower band, which is -2 standard deviation from the middle band. I'll show you the example. Hold on. Okay. So this one. Okay. So this is one standard deviation. You can see 65%, it covers 65% of the data, but the remaining goes out of it. Is it visible? Yeah. Then if we add up the second standard deviation, it covers 95% of the data, but data still is going out, right? See, the candles are going out. And then there's also three standard deviation. It covers 99.7% data. So yeah, just this covers 99.7% of the data, and the 0.3 still goes out. See here, which is very rare, to be honest, on the market. Now coming back to the chart. Okay, so these are the three components: middle band, upper band, and lower band. I'll come back to this relative strength index later on also, but I just want to explain it very shortly. See, Bollinger Band, humans are rational. Humans are not rational. Humans are emotional, which is there is a reason we use this, which is why this 20 period moving average is very important. And patterns emerge in market. Okay, so that is the reason Bollinger Band is a lagging indicator, because it uses 20 period moving average. It uses the average of the last 20 period moving average. Now, can you see this range, RSI range? There's trend and range. There's a uptrend when the range is between 40 and 80. There's a downtrend when the range is between 60 and 20, and the market is sideways when the range is between 40 and 60. Strong uptrend when it is 60 to 80, strong downtrend when it is 40 to 20, the range. And RSI is a leading indicator, which is why I paired it. It is usually paired with Bollinger Band, because lagging and leading, it gives us clear entry and exit signals. The other indicator I've used is stochastic oscillator. Now, stochastic is a derivative of RSI, and it is much faster than RSI. The reason I've used it, stochastic oscillator, is because Bollinger Band uses three strategy. Whenever the market is choppy or range bound or sideways, you focus on stochastic oscillator to have the trades will give you maximum output. Okay, these are the charts I've been using. I'll be using two charts, but to be honest, you just need one chart for Bollinger Bands. I'm using this for another strategy, and also I wanted to add a volume profile, which is why I use money flow index and Hersi in my other chart. It is a 15-minute second chart is 15-minute time frame Heikinashi. First chart will be 3 minutes Heikinashi.
Now, 1 minute.
Yes, sir.
Go to the money flow indicator. See, don't think all indicators are lagging. Many people advocate indicators means everything is lagging. No. Take this money flow index. That's a leading indicator.
Yes,
right?
sir.
It's not a lagging. Am I right?
Yes,
order
sir.
flow is a leading indicator. That is why not now, next week, I think we are going to have this volume profile strategy. So that's why we go into, so money flow, super trend is also not a leading indicator. That's why we depend on super trend, VWAP. So these are there are a few indicators which are not really lagging. For example, very good comparison he gave between RSI and stochastic. Stochastic, why we sometimes prefer, it gives a few minutes before RSI. So we should know a little bit research and find out, it's mentioned there. So please understand that all indicators are not lagging. There are leading indicators also. Because you are not heard about it, because you are not used to it, you are not familiar with it, doesn't mean that you should not use it. You should use more of those leading indicators. That will increase the probability. Okay, thank you, Nilesh.
Yeah, I've also used NMACD. This is a trend indicator. Stochastic is momentum, RSI is momentum, and then Bollinger is volatility indicator, and this one is volume indicator, money flow index. RSI is also a momentum indicator. Now let's talk about Bollinger Band squeeze. Okay, whenever there's a squeeze is where the market is very consolidated. The upper bands and the lower bands are closer, and a squeeze in Bollinger Band, the price flows between the squeeze as if a ball is bouncing, and this indicates that there is a big move that will be coming. For example, roughly about the time frame 11 to 1, most of the times the squeeze happens. We call it boring. Nothing happens in that time. So that is the region known as squeeze. I'll show you on the chart, but yeah, yeah. See, this is the squeeze. The price is not moving anywhere. I'll show it on the chart. This period, it is hitting the first standard deviation, then going back, then the price is not moving much. Yeah. And then it suddenly gives a breakout, like it was mentioned here. See, the squeezing action of the Bollinger Band indicates a foreshadow often foreshadows a big move in the upper or even in the lower direction. I'll show you multiple examples of this. See, here it gave the breakout gave roughly about 226 points, and this is the squeeze on the chart. Here it is on the chart. Squeeze, and then it gave a big move. Now I'll show you multiple examples of this. The price didn't move much during the squeeze period. See, it moved here, back. Again, this is one more example of squeeze. See, this is a squeeze, and then it gave a big move. And this move was roughly about 700 points. I think I marked it, but if not, I will just mark it for you guys. Okay. Yeah. See, 700 points. And there was no signal from Bollinger side, so you could have traded till 900 points. And this was a morning trade. Again, one more example of squeeze.
You say morning trade, I'm very interested. Go back.
Yes, sir. Just one minute. I want to
morning
explain.
trade, I'm getting more and more interested because people are also, our members are asking for more.
Okay, one more thing.
What time you could have taken this trade?
Sir, this was
Early
actually
morning. First candle, is it?
Yes, first candle, sir. It went roughly about first candle. I'll show you how much it went. This was the first candle.
Okay. So you can be absolutely sure because from squeeze it is expanding on the downside.
Yes, one
so
thing I want to tell.
This is strong and you can take the first candle.
Yes, sir. It moved roughly about 570 points in the first candle.
Yeah, now, at least you can get 200-300 points if you enter.
Yes. One more thing about expansion is, after squeeze, it is very definite that the market will expand. But the market was closing and it expanded. So you could have carried a morning trade, carried the trade to the next day.
Yeah, but we do not know whether it will go on the upside or downside.
No, right? Sir. Here it is very obvious. See, the squeeze and it went down. Actually, here the concept of band walking started.
Yeah, we'll come to that later.
Yeah, which is why I'm just explaining squeeze here. I'll explain furthermore. I'll give furthermore examples.
So this is guy, the first candle trade, somebody was asking, this is how you justify your first candle trade. So Nilesh showed it a very good example. The previous day closing itself, last 15 minutes, or last half an hour, how it's going to open because definitely it's cool. now you have an indication that it's going to open on the downside. So either you carry the position or you take the first candle right away. Am I correct, Naresh?
Yes, sir.
Right.
One more thing. See, this is also an example of squeeze, and here you can see the market just gave a breakout, and see the breakout was huge. If you just follow Bollinger, no other indicators, this has to be your area. And even after using just Bollinger Band, you could take 201 points, but we are snipers, like Jagan sir said, so we'll go for more. See, this is our exit, roughly about 24 points. Again, I'll show you one more thing. Squeeze. See, here the market is squeezed, then it went down, it gave a false breakout, and again here it went up, and this is the move for roughly about 289, 290 points. Yeah, so this was the example of squeeze. What happens after a squeeze? Now I want to explain one more concept. Okay, and please, I want to emphasize on this word. Please use this only when the market is range bound. Like I said, we will observe stochastic here more closely. We'll also observe RSI and NMACD, but stochastic more closely because it is a range bound market. For example, this Friday, the market was very range bound. So here the concept of mean reversion comes into play. Overbought and oversold, and here the concept is from the 20 period moving average, if the price goes and hits the upper band, it will pull back. If it goes to the lower band, it will again pull back, and it will keep moving like a bouncing ball between the upper and the lower band. See, the range mean reversion strategies can work well as price travel between two bands like a bouncing ball. See, this is not a chart, but I just want to give an example by a photo. I'll show it on the chart as well. See, the market, it hits the upper band. Since it is a range bound market, it hits the upper band, then it moves. This has to be first target, the 20 period moving. When you take a trade here, this will be a sell signal. This will be our first target, and the lower band will be our second target. So in this case, it hit the first target, and it reversed later on, but it still gave you a big move. Later on, here it will be a buy signal, and this goes all the way up. This has to be your first target, the 20 period moving average, and this will be our second target, but it will still carry, and we'll see from here it went again back to the lower band, and again a sell signal here, and here we'll exit. Again a buy signal here, we will exit here. Again a sell signal here, we'll exit here. I'll show it on the chart, and this is the latest example of that. So yeah, the market was very choppy on Friday. It was very range bound. I'll show you. You can see this in the 15-minute time frame. So yeah, this is the 15-minute time frame, and can you see the market is very range bound? I'll just, yeah. Only after the morning move, it didn't move much. See, it only was in between this range, this one and this range. So I'll just go back to the chart again, 3-minute time frame. Yeah. So what to do in that situation? In that situation, the Bollinger Band will move between the upper and lower band. See, here it was a squeeze till this point. Let me just, and it gave a, okay, I'll just move this because it is a squeeze, and then it gave a breakout. See, so this arrow, I'll move it back. This arrow is our entry signal. Now, why I'm just showing it on this chart. I'll show you a confluence also. See, NMACD is above the upper range. RSI gave a entry signal. Stochastic gave a entry signal. Now, I clearly mentioned focus on stochastic more during a range bound market. So here is our exit. See, here is our exit. Then again, this also shows a M pattern here, and then it went down. But again, I'll just remove this. This one. Okay. Yeah. Now it hits the band. Okay. It hits the first standard deviation, and we will have to wait for the confluence here. It gave a entry signal here. Sorry, a sell signal here. You enter here. From here, I've also mentioned point C. Here it gave roughly about after the breakout.
Use short or long terminology. We don't.
Yes, sir. Yes, sir.
Right. Yeah.
Okay. So here it gave roughly about 317 points. And here it gave a short signal. See, confluence of RSI. Then NMACD also gave a hint. Then stochastic. And this gave roughly about, here was your entry. Then the lower band is our target, see here. But then we don't just trade on Bollinger Bands, we also use other indicators. Here, no indicator gave exit here. Stochastic gave an exit, but then again, there was no, this was a, again, it was an exit. I think I messed up the, okay, let's take another trade here. Let's take a long trade here. It touched the lower band and then it went up. Since it's a range bound market, mean reversion will take place. So this will be our entry. This will be our exit. And the reason entry exit is here. It gave an entry here. It gave an exit here. The stochastic gave an exit here.
And also the volume.
Yes, sir, also the volume.
Volume. It is
And
more than 50K, I think, both.
Yes, sir, it's more than 50K. 73K, more than 58. And then this move gave roughly about 350 points. Again,
see, one second. There's an interesting observation. See, let's have this two candle theory. It is not working here, right? It is
yes, sir.
See, this is what I want to. I always say. This many ways our indicators, our thing. See, there is two candles above 50, right?
Yes, sir.
But here, in spite of these two candles, you can take an exit, correct? Because
yes,
of Bollinger Bands. Whereas normally what would have happened, you would take a candle, on the third candle, you will take an entry, correct? Right?
Yes.
But it won't work here, right? Am I correct?
And then we get stuck here.
Yeah. So you are stuck. See, this is why you see this confluence, combine it, have a good knowledge. So you really know that, when you take a trade, you never lose. This is more important. Whatever gaining is different, you at least never lose. This is a good example. You have volume, but there is this mean reversion working because that is where the standard deviation principle comes. Okay. Now, one question quickly, we don't have much time. There were some questions I just saw it in the chat. People are asking about where is the false breakout, not to you, to our previous, to Arvind Delango. So my suggestion is, because of lack of time, Arvind, are you there? Okay. I'm sure he is muted.
Yes,
He can send this example of a false breakout. Can you please post in the group whenever you get time?
Okay, sir.
Because we won't have time to explain.
You can't connect to the Wi-Fi network. You might want to check the connection.
Okay, I will share it.
One more thing. See, here also, this is a range bound market. It touched the upper band. See, this one is hitting. the upper band. And here you can be very sure that, actually this has to be our exit if we only use Bollinger Bands and no other indicators, but our system is very superior, like Jagan sir said. So yeah, that we will use confluence here, and here you can see RSI gave a signal, then NMACD also gave a signal, and then stochastic gave it way before. So here you get roughly about 237 points. Again, the similar, but let me emphasize on this word that please use this only when the market is range bound. Do not use this strategy when the market is trending. There's a different strategy when the market is trending. I'll just explain that very quickly. Here. Now, there's a concept called band walking. Now, this is a strategy that is used for used when the market is trending. This literally means that the price is walking on the band, or the candle starts closing and the candle starts closing outside the band. I'll show you good examples of this strategy. Okay. Okay, here is the first example of band walk. See, this is a trending market, so we don't use that strategy here, the mean reversion strategy. But yeah, this one. Okay. So here you can see the first candle touches the second standard deviation, and the second candle touches closes outside the second standard deviation. So this is known as band walking. It's the price is walking on the band. This is also closing outside the band. Even the third candle is closing outside the band. And the points here we gain if we take a trade here. The points we get here is.
Unless the third candle is closing inside the band, right? If I'm not
No. See, the third candle is the wick it gave is outside. This has to be our exit.
It is a green candle, right? The third candle.
Yeah, it is a green candle, but still, we have to continue because you might not know what the next candle be. But our system, again, I said our system is very superior. So what we do is we use a confluence. See, RSI and MACD. So it gave us a entry signal way before. Here, this has to be our entry, and according to RSI, this has to be our exit. So we are not leaving anything. We are snipers, like Jagan sir said. So we are not giving up any points here. We are taking the entire points here. And if you want to see how many points we can get here, just a rough idea, it's roughly about 900 points. Again, I'll show you more examples. I've marked every examples of this. See, this again is a band walk. Yeah. See, this was a squeeze here. And then, like I said, there's always a breakout after a squeeze. So here we go. This is a sell signal, and this is the exit signal. And here you can see there's a band walk. But if we just use Bollinger Bands, this is where we will exit this point, and we'll miss out on this chunk. Since this is very good, our strategy is very good. We use the confluence thing. This will be our entry, and roughly we will gain this much amount of points. 300. This is roughly about 380, 390 points. Again, one more example. See, here the market was range bound, so it gave the previous strategy, the mean reversion strategy. Here the market was range bound, but so our RSI gave a signal, stochastic gave a signal, NMACD gave a signal, and here we could roughly about gain this much points. I mark the entry. 270 points. Again, one more example of band walk. The first candle touches the second standard deviation, and then entry, and the last closes inside. Now I marked it. I'll just move it to show you. See, see, only by using Bollinger Band we can get this, but Again, our system is superior. So we will take an entry here. This will be the red arrow. This will be our entry. This will be our exit. $230 points. Here, RSI gave entry, NMACD gave entry, stochastic gave entry. Here, all of them gave exit. But since stochastic is fast, here, 270 points. Here, the market is consolidated. Here, it is squeeze followed by a breakout. Again, please, if just text band walk is written on the chart as well. Okay. Not clear. Should I explain band walk more? Hello? Hello?
One moment, Avinash, can you find
Nilesh, that was a question by Srini, which I clarified. He mistook as bank walk, which I clarified to him as band walk. So that's okay, no worries.
Oh, okay, never mind. I'll just explain it again. See, this, it hits the second standard deviation, and this has to be our entry according to Bollinger. Just if you use just Bollinger Bands, no other indicator. This will be our entry, and this will be our exit. Again, our system is superior. We got a crossover here after a squeeze, and we got this much points. Yeah, roughly about 180, 170 points.
Nilesh, I
Yes,
suggest
sir.
you go to see this question from Srini. I see it is written at 901 when you started explaining band walking, and
Okay,
he says it's not clear. Even you just started band walking and people say it's not clear without listening. What can you do? I think it's enough.
Should I start again?
Example, go to the R3 which you wanted to do, because
Okay.
you have another presenter.
Now we have one more thing called as R3. What this does is it covers the rest 4.7% of the chart. See, this goes out. So I'll explain the strategy. See, like you can see, whenever the price touches the third band, the third standard deviation, like Jagan sir said, it has moved or touched the 99.7 area, which is very rare, which happens very rarely. So you can expect, without even thinking, you can just take a trade here without a reverse trade. Whenever the price touches the third band, there's a strong chance of it reversing. Here, see, it touched here and it went back here. It gave roughly about 284 points. And again, we also have the confluence here, RSI, NMACD, and then there's stochastic, and we got
Nilesh,
a exit. Yes, sir.
Sorry, I just want to emphasize your point, give force to your argument. It is not, it is likely to reverse. It will reverse.
Yes, sir.
It will reverse to the mean, 99.7%. It is like Willie is trading at 100. It will reverse. It has to reverse. That is a sure trade. And you can show any point where after R3 level, it doesn't reverse, I can take a bet. It will reverse. So
see, even here,
if you guys want to really take one trade per day, just wait for this trade, this R3 trade, take your trade, you will definitely get not the, you okay, show me the point, they will understand. Okay.
Even here, it reversed a bit, but since it's a trending market, it went down. But here, it reversed, and none of our indicator gave a indicator that indication that it's a trade. Here, we will take a trade, and here is our exit. I'm sorry, I couldn't mark it for. Unfortunately, I'll do it later on. Again, I'll show you where it touched the third.
There was a very good example. Come left. I just saw. Sorry, I come left. Bring down the chart. Down, down, down. See that R3 here. They on the right. Yeah. Can you point out?
Sir, here or here?
R3 on the left side, very extreme left. Go towards your left, Nilesh. Yeah. You got it.
Yeah. Sir, I already mentioned this point.
Immediate reversal.
Yes.
Yeah, you see, you measure the points. No, let's take that measure.
Sir, I've already measured 284 points.
280, very good, excellent. Okay.
One more, I'll show you more examples of this. See here also it touched and it reversed, but since we are using consolidation, here also see, here it touched the third standard deviation. In fact, it went outside it, and you can see the fall. Look at the fall. It is more than 900 points.
And then there's band walk also.
Yes, there's band walk also. This one metal market.
Excellent. Very good presentation. You have any concluding remarks? We have only 20 minutes for.
I just want to thank everyone. Thank you, Jagan sir, and I especially want to thank Sanadeep sir and Prashant Sharma, because I talked to both of them a lot, and I even disturbed Sanadeep sir a lot for strategies. So yeah, thanks, and everyone, Avinash, Ajish, everyone who's a part of collaborative traders. Thanks a lot for guiding us. It is a huge opportunity. I've learned a lot from you guys. Thank you.
Thank you, Nilesh. Excellent presentation. I've known Bollinger Bands earlier, but correlating it with standard deviation, what does the first line mean, the second line mean, the third line mean? You've thrown some excellent light on that. Thanks a ton, Nilesh. Right now, we would move on to the last presenter, Gauri. Gauri, you there?
Is there a question for Nilesh or?
Yes, sir. If any question, please ask.
No, there are none whatsoever as of now on the chat window.
Good.
Yeah. Okay. So we move on to Gauri now. Nilesh, if you could just.
Yes, sir.
Yeah. Thanks. Gauri, please share your screen.
Yeah, let me share my screen.
Yeah. Until the time Gauri shares his screen, Gauri is a software engineer from Tamil Nadu. He's been trading for about 3 years now, and he'll be talking about the VWAP strategy, the VWAP dual band strategy. Over to you, Gauri.
Thank you. Let me know once everyone is able to see my screen.
Yes, we can.
Okay, thank you. Hello, everyone. My name is Gauri Shankar. Today, I'll be your VWAP strategy presenter. Let me introduce myself quickly. I'm a software engineer by profession and being into this industry for past 9 years. Got a passion towards trading and being into the trading industry for almost 3 years. Basically, I'm an option buyer and do trading only in Bank Nifty and Nifty options. Okay. Let me start. Okay, as part of this strategy, today we are going to see two things. One is a pullback and a breakout. Okay. I'll just give an overview of the indicators used. I'll explain these indicators later when I go to the chart. Okay, so we are using the VWAP, NMACD, GMMA oscillator, and RSI EMA. Okay. Okay, it's just a snapshot of a trading view. Okay, so let's start. What is a VWAP? Okay, the VWAP is a volume weighted average price. It's a trading benchmark used by traders that gives the average price as security has traded throughout the day based on both volume and price. So VWAP identifies the true average price of a stock by factoring the volume of a transaction at a specific price point, not based on the closing price, right? So for this reason, it's a great tool for understanding the current and future trend of a security and wait for the where the most of the traders are priced in. So what is the significance of this VWAP? So because it combines price and volume together in its value, most analysts consider this VWAP to be more representative of a true average price of the stock. The calculation of this VWAP is independent from, does not directly affect the stock's closing price, right? Since, the VWAP calculation is based on the historical data and it's still considered as a lagging indicator, but that does not stop traders from using these measures, right? So to establish the support and resistance levels suitable for the intraday trading. So in addition to this, because the institutional traders use the VWAP as a benchmark for executing these, executions. So the VWAP price levels is considered to be the highly influential in intraday price actions. So I just given a formula here, how VWAP is being calculated. So it's a summation of price into volume for the current period divided by the total volume. So it's being VWAP is being calculated daily. So it will just take the total volume of the day. I mean, for the current period, what is the price average being traded into the volume divided by the total volume. Okay. Yeah. Let's move on to the next. Okay, so how VWAP is being used? Okay, so VWAP, I'll tell you, like a VWAP acts as a resistance. I'm just giving you an example of how VWAP acting as a resistance. So this slide gives you an sample chart where if you see here, right, every time when the VWAP is being reached, the price reach the VWAP, the line suggests the sellers has a more strength. So before that, so the general consumption is the price when the price is above the VWAP, it was like a bull. Um, I mean, it's a bullish, and if it's below the VWAP lines, the bears are in control. Okay, so if you see this chart here, the price is struggling between the VWAP and probably the low of the day. So still, the price below the VWAP line suggests the sellers has a more strength than the buyers. Okay, so here this case it's acting as a resistance.
Gauri, I want to just interrupt. If I take your time, if I can borrow your time.
Sure, sir.
See, you have to give a bigger picture of this VWAP. You know, VWAP, super trends are not really that lagging indicators, but that is the line. The VWAP is very important because that is the line of fight between the sellers and buyers. As you said in the beginning remark, that most of the institutional traders trade around VWAP. Now, might have noticed most of the days, particularly the days, the ending will be at the VWAP level. They shake hands, they say. Sellers and buyers fight, and then nobody really having control. Then they bring it back to the VWAP line. Then shake hands and say goodbye, let's come tomorrow and fight again. So what is the shake hands means really, because people are trading at the VWAP, the institutional traders, they say, okay, there are buyers, there are sellers. When the VWAP line above, it is that the bulls are not only in control, the bulls are making money because they were trading around this VWAP line, and it is above that the bulls are making money. When it is below, the bears are making money. So when there's a real balance, what will happen is they've made the money, they've taken out all the retail letters, they've taken your stop loss, they've eaten all your money, they're satisfied, they come back to the VWAP, we are satisfied, our stomach is full, we have made enough money from the retail people. The bull people, what they do, you see the trend. This chart itself, it goes above. Yes, they've made money, bulls were in control. Then it comes back, here. I think it's a day chart, I'm not sure. I'm assuming. So I'm assuming it's a day chart, even if it's not a day chart. So it starts, goes up and down, and the end is start at VWAP, it ends at VWAP. What does it mean? That they've eaten all the money, then they close hands and they will start another day. You can have another day and thing where the entire thing is down also. So this VWAP is really the balance line, and trading above and most people say you should trade above the VWAP. No, you can trade both above and below. That's how we trade. And of course, Gauri, you're going to explain this, I'm sure. So, but I want you to have this broader concept. VWAP is a very important line. And another thing you forgot to say, Gauri, is that VWAP is only for the day trader, right? Am I correct?
Yes, sir.
Yeah, it is only for day trading. Next day, new VWAP line is created. Am I correct?
Correct, sir.
Yeah, so that is another point you must remember. VWAP, that's why it's a daily line or indicator, and it is created every day based on the averages. So it is very important for our day traders and scalpers and swing traders. Okay, yeah,
Yep.
please proceed.
Yep. Thank you, sir. Thanks for the explanation. So as Jagan sir mentioned, it's very important to see the price actions towards this VWAP line. we have like a trending market sideways, right? So if you see here, okay. Yeah, if you see here, right, when the price is approaching towards the VWAP line, if you see the price action towards this area, there was some the candlestick shows, shows even they're trying to close below the VWAP, but the long wick shows, closing above the VWAP shows that the strong bullish trend is coming. So this VWAP, whenever the price reaches to the VWAP, the price action has to be considered as well. So this is just a sample, like when the price continuously trying to test these VWAP lines. Once it is broken, initially it was acting as a support. Once it is it's broken, the same line has been converted to the resistance lines. So initially the bulls were in control. After a certain period, the bears has taken the control from the bulls. It is just a sample based on the price actions of for how to identify the trending market, right? So if you see here, just look for the 2 or 3 candles in the same directions. When the first time price approaching the VWAP, look for the push away from the VWAP. Okay, and if you see a good follow through on that VWAP rejections, so that will be considered as a trending one. So whenever if it reaches a pull back to the VWAP line, you cannot take any entry. If a candle is a pullback, making a pullback from the bottom, you can consider as a short entry. And if it's VWAP is on, if the price is above the VWAP line and coming back towards the VWAP line, you can consider a long entries. For ranging markets, if you see here, right, on the initial balance, we have seen like the candles are struggling to cross. The price is trying to cross the initial balance. What will happen is these cases it will continuously will break the. It will revolve around these VWAP lines. It will continuously touches the. Crosses the VWAP lines going up and down. You can see the inside bars. So that will help us to identify the ranging market. Okay, so now we will see the 2 strategies. One is a breakout and the other one is a pullback. So first let's see about the breakout. So what is the breakout? So when initially the price is trading in a range, okay, and at certain point it crosses the VWAP with a high volume or an average volume, right? If you see the sample picture here, well, it indicates that price is trading in a range for a certain time, and at a particular point it crosses the VWAP line with a high volume. So at this point we have to take an entry on the closing of that breakout candle. Okay, so this is a breakout one. Next we'll see what is a pullback. Okay, pullback on a trending market. If you see here, the price is moving above the VWAP, we may not get a chance to take an entry, right? When we are looking for the entries where we can take the entry, right? So if the price goes near to the VWAP line, and if you see a price actions over there, like if you see a rejection from the VWAP line, there you can take an entry. So this is a pullback. Okay, I'll go through the chart. I'll explain what are the indicators I have used, then I'll show you some examples. So I have used only one chart, one layout for this strategy. So I'm using VWAPs. Okay, VWAP with the 3 standard deviation lines: VWAP SD1, SD2, and SD3. Okay, and we have NMACD, RSI EMA, and GMMA oscillator. So these three oscillators are being, these 3 indicators are being used. Okay, I'll just tell you the settings of this quickly. So for this is a VWAP in build 1, and here I have used the first one is having the bands here, right? This is a SD1. if you see these are time frame, the sessions and the source is all these are default ones. I just modified this band one. This band is a 1. Okay. Similarly, the same here we have the band 2. Okay, all the settings remain same. Only the band we are using is 2. Similarly, for the other one, we have used band is 3. So these are the 3 VWAPs I have used here. And these NMA, CD, RSA, EMA, GMMA, I haven't changed anything, which I was just using the default ones. Okay. Let me give an example of the breakouts and trending.
Sorry, the GMMA, I don't understand. What is this indicator you're using?
So this GMMA oscillator by Guppy.
Have we done this before?
It was not part of any of the charts given, sir.
So why didn't you use the GI here?
I can use GI also, sir. You want me to try GI now or?
No, can you replace it with GI and see? Because there's no point. You already have a band down, which is the RSA EMA. Can you replace it if you don't mind? Index. The second one, I think.
Let me copy from the chart we have.
I'm sorry, Gauri, you have told me before I would have changed.
No problem, sir.
Because you see why we should give some new information. You have RSA EMI. Also, your coloring, you should have really chosen a good contrast. It's okay.
Okay.
Yeah, but it's fine. No, GA you can choose directly.
This one you're referring to.
You are
Just
copying. Okay, no problem. You're copying. Then remove the other one. The GMMA one. We don't need that. It will show a much better picture, you see. Remove the oscillator. Because if you're taking GI is much more and people are using it, we are used to it. Okay. So can you save the chart? Good, thanks. Oh, you are using a wide angle monitor, I think, right?
yes, sir. Yeah.
That's why it's coming. Okay, good.
Yeah. So one of the entries just. Okay, sir. Okay. So if you see here on this VWAP, we have this blue line is neutral line. We have this SD1, SD2, and SD3. So here we are going to see the breakouts on any of these SD lines. Okay, if you have these confluences along with the other indicators, and if it's having an average volume, and if it's crosses, if it's having a breakout of any of these SD lines or neutral line, we are going to take the entries. So this is the first one here. If you see here, it's an this is SD2 line. If you have this entry, okay, I didn't mark this blue line.
Yeah, we are following blue line for entries and black for exits, correct? That's
yes, sir. Yeah.
Oh, good.
So once you have this entry here, if you see this confluence of all the indicators, and based on this, it was actually, if you see here, it's even it has broken the neutral line. So you usually, if you have a high range, you the next neutral line or SD line should be your target booking. But if you see here the price action, if it has closed above this line and your indicators are supporting your trade, so you can hold it for some time once it has reached this point, and even it has crossed this line. But if you have, once you have seen this red bar here, you can close this one. So similarly for
Wait, Gauri. I'll tell you what is the correct exit. Move your black line, black one, where the long, I'm talking about the GI, the long averages are ending the up, right? Yeah, that is why. Now you see your RSI MA, the green, you could have colored it a bit darker, it is ending. And you see your VMACD is at the correct point. Actually, this should be your correct exit.
Okay, sir.
Yeah, okay.
Yeah, yeah.
So, I mean, taking the confluence. If you look at your own, I don't have a problem with your exit, but you don't know, because when you are actually trading, now we are looking at hindsight because everything has happened. Okay.
Okay.
But at that time of trading, you do not know. It can go further, it can come down, anything can happen. That is why we look at the other indicators and we are taking a confluence, right? We consult other indicators. So what particularly the GI is saying, see, is it smart move to exit when the long term is going uptrend? Tell me, no, right?
No, right. Yeah.
So you have to wait when the long EMIs in GI is going up. Definitely you don't want to exit because it can, but the momentum is not strong. You have to look at the volume. The volume is already reducing. So it is going to trade sideways for some time. So we get the clue. So then we look at the RSI MA, it is also coming to an end. Then we look at the NMACD, it is at a high point. So yes, you could have exited like you said, but the really smart move will be to exit, because at that time of trading, we do not know what is going to happen. Okay.
Yeah. Okay.
Yeah. Good. Thank you.
Yes, sir. Yeah. I'll show you some more examples. Maybe some of them are short entries here. So I'm just taking this few short entries just to show, like, sometimes it may not cross and go long, but if you see here, once it was under this SD1 line for some time, once it has a breakout here, if you see the confluence of all the other indicators, and once it has reached the neutral band, same here, like um, the exit may not be the right, as Jagan sir mentioned. I would have moved it a little right, but
I'll tell you one second. We don't have much time. See, this is what I want to. Your exit is fine. I don't have a problem, but I want to see how to be more smarter. You move that blue line by one candle left. Yeah. Now you see, this is the starting point of your GI. Okay. So it's giving you advanced information that the trend is starting upward. Same thing with RSI GMA, same thing with the BMACD, correct?
yeah.
So what I'm saying is this, the point is nothing wrong, Gauri, with your entry. It is fine. But I'm saying these, our indicators, what we have adopted, they are giving at least one candle, which is yours is 3 minutes candle or 1 minute candle.
1 minute candles.
So at least 1 minute before, we already know the trend is going to be up. So we prepare for the entry, we take the entry while the candle closes, you are ready. So you may get about 20, 30 points, I do not know, extra between these two candles. So this is where our indicators give advanced information. Okay, this is a small move.
I can't connect to the Wi-Fi network. You might want to check the connection.
So let me
Okay,
calculate
I don't
this.
know where it's coming from. Okay, let's ignore that. And what I'm trying to say is, if there's going to be a big fall or a big upside move, that 1 minute matters a lot. Suppose you get a big algo candle next, up or down, 150 points down, then once it is down, then you are not sure whether to take an entry or not. So you will miss the entry. And I saw that in the last 10 days, many people miss the entry because then this algo candle comes, and after that, you do not know whether it will have a reversal or a pullback or a retracement or whatever it is. Okay, so
Yeah.
nothing wrong with your entry, Gauri, but this is what I want to highlight. Okay.
Yeah.
So we are about to close. So please quickly go through. In next 2 minutes, you should be able to close. Okay.
Sure, sir. I have just one other example, so I'll go to that. So this is other one on other entry where so once you have here this breakout on these lines, if you have taken here, actually we should have taken entry here itself. Previously I was using that the other indicator which was not giving the proper signals. So now once we change this GMMA index, I think it's fine. Now we should have taken the entry here itself. So once you have taken the entry here after changing this GMMA, right? So if you see this, all the other indicators are supporting. So this was a good exit. So
How many points quickly before we close? See, this is the beauty of these indicators. It is giving an edge. All the other people would have taken the trade, whereas you are taking how many points?
220.
20, yeah.
220, sir.
220. Good. So now you see now how the indicators and the confluence concept, which I have been strongly advocating, how it is useful. So thank you, Gauri. Do you have any closing comments? You want to take questions?
Yes, I'm good from my side. Thank you for giving this opportunity, sir. So any questions for me?
Avinash?
None on the chat window as of now. There's one from Abhi which says the exit entry signal was earlier as well at 12:37. Can we enter there? 12:37. Gauri?
Which entry? Maybe this not the this one. Maybe the previous one which I showed. Okay, here he's referring.
1 second. Abhi, I'll just unmute you. If you could, yeah, that's the entry that he's talking about. Yeah.
Right. Actually, when I was using that previously, that indicator, right, it has shown. I mean, the different signals. But yes, as per this, there was a entry here as well, and this one, it has come back here, right? Yes, I mean, maybe this was once you have taken here, maybe it should have you should have kept your stop loss below this candle. You should have hit your stop loss.
No, there is no entry there. It is not breaking with volume. Just look at it. The one blue mark is the correct entry, Gauri. Okay.
Okay.
Yeah, there's no entry. Of course, you go and consult the volume and other things. Definitely, the correct entry is where you're marked. Okay, thank you. Avinash, can you give your closing comments?
Yeah, thanks a ton, Gauri. Great to know about the band VWAPs as well. Any further questions from anybody, you could just put it in the group. Individual presenters would answer them in the group itself. And that's it for now. I leave you with a note that you need to practice, guys. Whatever is being taught here, it's not just, you come up every week, take up, whatever is being presented and just go back home and sleep. Tomorrow
One comment about the recording. Sorry, Avinash, to interrupt you.
Yeah,
Very
sure.
important because you might close before I speak. See, the recording is going to be like this. Tomorrow morning, the recording will be posted in the YouTube channel. Okay. And then it will be a restricted one. And Shashi, I hope Shashi is there in the meeting. He will arrange to send a link. It will be automatically sent to your email. Whoever has registered what is that Google form, right? Ajish is not here. That form, whoever has filled up, so based on that data, you will get the link to your email, and you will be able to access it. Okay, this is how it's going to work. If you are not registered in the form, please do so. If you're not subscribed to the channel, YouTube channel, do so that you will be able to view it. Last time we had session 5, we had substantial views. I'm sure some people saw it again. So this is how we are going to do it. Okay, over to you.
Done. Thank you so much, Mr. Jagan. And like I was saying, you need to practice tomorrow. Tomorrow is Sunday. Utilize it well. And whatever questions you have, just post in the group, and we'll be glad to answer. And I leave it with the note. I would really want to thank Mr. Jagan on putting in the efforts and helping out traders like us with all his knowledge that he's put in. Like I said at the beginning of the presentation, your key to success is practice, knowledge, and research. Knowledge, research being provided by Mr. Jagadia. Practice is what we've got to do. I leave you guys with that note. Good night. Thanks a ton, everybody. Thank you.